Okay, so picture this. Groceries delivered right to your door in under an hour. That is the billion-dollar promise that two huge Chinese tech companies just brought to the US stock market. But boy, did investors find out the hard way on day one that the reality is, well, it's a lot messier. And here's where it gets kind of wild. On its very first day of trading, one of these companies, MissFresh, watched its stock absolutely crater. I mean, we're talking a collapse of over 25%. That's not just a stumble out of the gate, that's a full-on faceplant. It tells you investors are really nervous about something. So this gets to the heart of the mystery we're unpacking today. You've got these companies that are literally burning through cash, they have never once been profitable, and yet they're raising billions of dollars. So the big question is, can this business model ever actually work? Or is it all just a high-tech house of cards ready to tumble? All right, so to really get what's going on, both the hype and the skepticism, we got to start with the idea itself. And, on the surface, it's a pretty brilliant one. The whole thing is built around this concept they call the front warehouse model. So forget about some giant warehouse way out in the suburbs. Instead, they sprinkle hundreds of these tiny little warehouses right inside residential neighborhoods. And that is the secret sauce. That's how they get you your stuff so fast. And for you, the customer, it's just ridiculously easy. It's convenience on a whole new level. You're thinking about dinner, you tap a few buttons on your phone, and boom, the groceries show up at your door, maybe before you've even had a chance to preheat the oven. It's magic, right? But yeah, not everyone's buying it. Not by a long shot. In fact, the head of a huge rival, HemaFresh, just came out and totally trashed the whole model. He called it a money pit, said it was endlessly burning cash with no visible possibility of profitability. Ouch. I mean, that's about as harsh as it gets from a competitor. Okay, so let's get to know the two main players in this whole drama. Think of them as two rival detectives, right? Both are trying to crack the exact same case. How in the world do you make this thing profitable and prove all the naysayers wrong? And this is where things get really interesting, because their strategies could not be more different. On the surface, yeah, they both deliver groceries, but dig a little deeper and you see they're going after totally different customers. MissFresh, they're all about young, single professionals. Think ready meals, snacks, that kind of thing. Dingdong, on the other hand, is aiming for families, people who actually cook. So they've got a way bigger selection of fresh ingredients.
Okay, so both companies want the same thing, right? To actually make money. But their roadmaps for getting there, totally, completely different. And this fork in the road is really the most fascinating part of the story.
Dingdong is going with a classic Silicon Valley playbook. Grow, 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 and worry about profits later. I mean, they are just blitzing the market, expanding like crazy, flooding cities with ads, and basically paying people to use their service with huge discounts. The whole bet is grab as much market share as you can, become the top dog, and then you can start selling fancier, premium stuff and finally turn a profit. And for a minute there, it looked like it was working like a charm. Remember the pandemic lockdowns in early 2020? Well, demand for delivery just went through the roof. And look at this. Dingdong's revenue absolutely skyrocketed. Meanwhile, their rival MissFresh, pretty much flat. So slam dunk for the growth strategy, right? Well, not so fast. MissFresh saw all that and did the complete opposite. They slammed on the brakes. Instead of chasing that crazy growth, they pivoted hard. They decided to focus on a completely different game, perfecting their technology, slashing costs, and just becoming as efficient as humanly possible. And here is the flip side of that coin. Yeah, Dingdong sales were exploding, but guess what else was? Their losses. They were burning through more cash than ever before. Now look at MissFresh. By focusing on efficiency, they actually managed to keep their losses in check. They held them steady. I mean, you couldn't have two more different results. So here's the key takeaway for MissFresh. They're trying to stop being a grocery company that happens to use technology and become a technology company that happens to sell groceries. See the difference? Their huge bet is that the real gold isn't in the warehouses themselves, but in the smart software that makes them run. And they've got some pretty impressive data to back this up. Check this out. Their tech uses machine learning to predict what you're going to buy. And because of that, they've gotten their product spoilage rate, that's food that goes bad and gets thrown out, down to just 2.5%. For fresh food, that is an insanely low number. It's even better than a lot of brick-and-mortar supermarkets. And, if you want to know a company's real priorities, just follow the money. MissFresh is pouring more than double the percentage of its revenue into R&D compared to Dingdong. It's crystal clear. They are all in on becoming a tech company first. So, when you put all this together, it creates this really fascinating dilemma for anyone trying to figure out where to put their money. So, who's right? Because what you have here are two totally different bets on the future. In one corner, you've got Dingdong saying, scale is everything, let's win the market now and we'll figure out profits later. And in the other corner, you've got MissFresh basically saying, hold on, the current model is busted, let's build better tech, get our costs under control, and maybe, just maybe, we can sell our smart technology to everybody else. But here's the fundamental problem, the big elephant in the room for both of them. This isn't software. It's not like a website where you can serve 1 million users for almost the same cost as serving 1,000. Nope. With groceries, every single new sale means you need more stuff, more warehouses, more delivery drivers, more food on the shelves. Your costs grow right along with your sales. It's a tough, tough nut to crack. And that brings us right back to where we started, back to that brutal quote from their rival. That idea of endlessly burning cash. It just hangs over this entire industry. Is there any way to escape that cycle? To stop burning cash to get bigger, when getting bigger just means you have to burn even more cash? So I'll leave you with this question. Now that you've seen both sides, where would you put your money? Would you bet on Dingdong's strategy, that high-speed, all-out growth? Or would you go with MissFresh's slow and steady, tech-focused approach? Growth versus efficiency. Which horse are you backing in this race?